What's up, Kate? How are you doing today?
I am doing good, Drew. How are you?
I'm doing great, man. Doing great. Just hanging in there. Enjoyed my Easter
Yeah,
weekend.
that dude. No, it was great. Oh, and Chad's trying to call me right now. Get out of here. Yeah, it was great. Like I said, got a nap in, had a bunch of food. It was, Cammie's birthday, so we celebrated not only Easter but Cammie's birthday as well.
I
So
saw that.
it was a good weekend for sure.
I love that. That's awesome. And good time to hang out with family. Good excuse. Yeah, always
Yeah,
nice.
yeah, I was sick.
Awesome, man. Well, dude, dive on in and actually tell everybody what's a little bit different about this episode specifically.
Yes, yeah. So in this episode, I am actually going live on my Instagram, so you can't see it, but to the left of me, I have my phone up and I'm going live. So if we have anyone that comes into the live and asks a question, real estate, financial planning related, we'll address it in this episode and kind of a double live situation. So should be fun.
I love that. And honestly, I think it'd be really cool to, employ that in every single episode that we do, give the audience the chance to ask questions. So
Yeah,
sweet, man.
yeah, that was sick.
But dude, dive on in. What you got for us this week?
Yes, sir. So this week I'm going to go over the Marana market. So every week I'm going to try to hit on a different part of Southern Arizona so we can kind of get an overall consensus of what's happening. In Marana, March of 2023, we are looking at a month supply of 3.1. So this is the highest individual market of Southern Arizona that we've seen so far of a month supply. Again, that's just how many months it takes to sell a home. Okay. So right now, the average in Marana is well over 3.1. Last year, in March of 2022, it was 1.5. So we're seeing a double. Okay. So it's taking twice as long in today's market versus last year to sell a home in Marana. But this is something we've seen similarly over every single market in Southern Arizona in the past few weeks. So something to take note of. Also, I wanted to quickly hit on where rates are at. So got an update today. The conventional 30-year mortgage is right at about 6.5, and the FHA and VA is right at 7.2. So again, we're still kind of in the mid sixes to low sevens, and that seems to be where the rates have been all of this year so far. So pretty typical. Call to action again, I would say that use professionals who are in the market that you want to buy. Okay, so I've had times in the past where I've had people reach out to me who want to move to Phoenix, right? And I'll say, hey, I don't really work Phoenix. I don't understand that market. I'm not there. So I always refer it out. If this is you, if you're looking to move into Southern Arizona, or you know of someone who's looking to move to Southern Arizona or needs help in this way, in here, then use us. Even if we don't work there or do that or specialize in that, we know of people who do. So just always encouraging people to not only shop, right? Shop your financial planners, shop your real estate agents. I mean, that's why you and I, Drew, we have a meetup that is not tied to only one profession. We open it up
Exactly.
to all professions, right? Because we want to instill competitive competition, right? To where, you at the end of the day, I want to work with people that want to work with me and vice versa, right? So we like to breed competition, and we always encourage to shop around, work with people that you feel comfortable working with. So that's the biggest call to action today for me.
Yeah, and I love that you hit on that because it's so right. I mean, I think it's like, working with people you want to work with, B, driving competition, promoting that abundance mindset, and C, just understanding that competition makes us better. It makes us grow.
Yeah,
There's always that complacent attitude where once you get to be the top, you just become, complacent and you're not willing to
right.
grow. And that's why, most Fortune 500 CEOs, they're 10 years less than 4 years is because technology advances too quickly and they become complacent. They run and they're good at that specific step. So making sure that you're surrounding yourself with many people. I have multiple advisor friends, and we all just pick each other's brains to make sure that we're doing the best for not only our community but just for our clients in general. So
Yeah.
I completely agree. I completely agree.
Baller. Want to give
And
us
it,
an update?
absolutely, yeah. So last week uh, was a pretty weird week. It was very just stagnant almost. So S&P was up 0.17% last week, up on the year 7.45%. Russell 2000 was down 1.75%, but up 1.25% for the year. And then the Dow Jones was up 1% and up 1% for the year. So we're seeing that sort of, again, bottom. You know, we had that weird at the beginning of the year influx, and then we had a significant decrease, and now we're kind of seeing a bit of a rebound. So it'll be exciting to see where this year goes, and kind of see where we end up long term.
Yeah,
But
for sure.
for call to action, I really want to implore something that I think is kind of cool, and I want to definitely start and preface this conversation by saying that this is not for everybody. It is very client specific. However, for the right client, it does work. And so I tend to work with a ton of realtors. That's just who my market is. I like to talk. And a lot of realtors are under the impression that they're going to invest in real estate only, which I think is great. You know, invest in real estate, invest what you're a master in. But also understand that if you work in real estate, you invest in real estate, and you live in real estate, you're leaving yourself exposed to the real estate market. And should we have another 2008 or another crash of some sort, I mean, you are going to be hurting big time.
Yeah.
And so diversification, and one way we've seen diversification that truly works is by buying life insurance policies that mirror and give you that sort of infinite banking strategy tied to to different real estate properties. So for example, I have a rental property. It's a condo worth about 100 grand. Well, it's worth about 180, but I owe about 100 grand on the mortgage. So one thing that I am doing is I'm buying $100,000 life insurance policy that is going to be a custom whole life. So it'll be tied not to the house, but the idea between myself and my partner is that it's going to be used for that in case something happens to me. Now, when I put money in, it's going to be funded by renters. So I have already enough cash reserves, and I really want to point this out too. It's important to have cash reserves on the side for the first couple of years because it takes a few years for this for the actual account to grow to be usable, right? It takes about 5 to 7 years. However, once it becomes usable, you have a significant cash value, then you can actually draw on the cash value and actually use it to fund emergencies that come up. So I have my cash reserves right now, and I am going to use the cash flow that I'm making from this rental property as the premium payment for my life insurance policy. So there's nothing out of pocket, and it's going to grow and grow. Should something happen to me, my mortgage can be paid off instantaneously, almost like mortgage protection.
Yeah.
And should there be any sort of, let's say the AC blows out, you can pull money off the cash value of this whole life insurance policy, pay it off, and then repay back into the policy with the cash flow that they're doing. So kind of a unique strategy. Again, doesn't work for everybody, but for the right people, if you've got enough cash reserves, you have enough cash flow, and you've got a rental property, it might make sense to explore that. So
That is really cool. And out of all of the clients that you have, how many would you say, specifically in the real estate space, utilize a life insurance policy in some creative fashion?
every single one of them.
Yeah.
And if they don't have, okay, so let me take that back. Not every single one of them yet, but every single one of them is open to the idea, and we're actively searching to kind of figure it out. Because think about this, you know, every wealthy person has a life insurance policy, but not because of the death benefit. It's because of the utilization of the cash value and the strategies you can employ within that life insurance that make it really, really desirable for the upper class and for those wealthy. So
Yeah. And it's, correct me if I'm wrong, but the idea is that, for anyone who's never heard of a life insurance policy or cash value or any of that, the idea is that it's your own personal bank, right? Is the idea that Cade doesn't have to depend on Wells Fargo or Bank of America to be able to get financing or, cash rich to be able to take care of certain situations, but that I have my own bank I could essentially run to and pull cash from is the idea.
Precisely.
Yeah.
Yep. And it allows you, and it is grown, of course, by the own money. It's kind of like a savings account that you're building within a life insurance that's growing at a percentage interest rate. So, for example, New York Life, we grow at about 4.7% on an annual basis because of our dividends and the way that the money is invested in our custom whole life. So yeah, you are getting a little bit of appreciation there, as well as, it's, you're putting in money on a monthly basis, and if something happens to you, you're protected. It's kind of an all around well designed product. Now again, there are cons to it, and if you'd like to, kind of answer those questions, I'd love to sit down with you and kind of run over that. But for the short term, and or excuse me, for the overall idea, it is a unique strategy to explore. So, and I actually have one question for you, kind of going back to what you said earlier, that interest rates are about 7%. Can you shed some light? Do you think, you have a guess as to where you think interest rates are going long term or by the end of the year? Or you kind of just rolling with the market, rolling with the punches, not really no.
Yeah. So my personal assumption is that people have gotten super accustomed to the 3%, 4%, 5% market, right? When you look at mortgage rates historically, they have never been that low.
Yeah. Yeah.
They've never been that low. So moving forward, I think it's a safe assumption to say this is the new market. The pricing of where homes are is where it's going to stay. The pricing of rates is where they're going to stay. Now, the goal of the Fed is to bring that down to where we saw the past few years. But when you consider the amount of money that's been printed and you look at the demand of housing that's still there, even with the prices where they are, I just don't see it going down. I really don't. Not anytime soon, anyway. Over the next 3 to 5 years, potentially, if the Fed can get a grip of things and the influx of money slows down. But due to the fact that they're still printing money and there's still that demand there, I mean, I don't see any time in the near future rates going down. So what I can encourage is that if you are in the market to buy, because to be honest with you, I'm looking to buy, obviously investment properties, I'm always looking to buy, but my own personal residence, I'm looking to buy in the next year and a half. And you just have to kind of play with the cards you're dealt. So the best thing you can do is find homes that have either been sitting on the market for a while or the sellers are in a tight situation that they need to sell, that you can get, again, seller concessions to buy down that interest rate. So for the first year, let's say you use a 2-1 buy down program, right? That first year, you're buying your rate down from a 7% all the way down to a 5%, right? And that's going to make your monthly payment much more affordable for the first year of your loan. So that way you can kind of hold off the first couple of years to see where rates go. But yeah, I really don't see the rates moving much, at least this year, in my
I
opinion.
love that. I love that. And I'm the same exact way. And that's why, I always look at homes and I hear people in the real estate industry, they say, man, I wish I would have bought. Whenever they're talking about they wish they would have bought, never once are they talking about the interest rate on the home. They're always referencing the purchase price. So yeah, I agree.
Yeah.
If you're
And
in
yeah,
the market,
and again, price is not moving. Price is not moving. So, we are seeing a lull in the market, right? You're seeing all the month supply of these homes, right? It's climbing. So homes are taking longer to sell. But something you have to understand, there's not a whole ton of new construction going on, right? So back in 2008, 2009, you had an influx of homes being built. So there was so much supply and not enough demand, right? And now we're seeing there's still a ton of demand, but not enough supply. And so, as far as pricing is concerned, I could see it, I think we're coming back into a market where year over year, you may see a, 4 to 5% increase in pricing kind of, on average, but we're not going to be seeing the past 2 years where it was like 20 to 25% increase in pricing. That's definitely not going to happen. It's definitely slowing, but at least in my immediate market in Saudita, you were in a home for $200,000 to $250,000 for the longest time. that number has now risen to 350, 300,000. So we're in a completely different bracket now of pricing that I just don't think is going to move. Because again, we are seeing homes still going, depending on the property, we're still seeing homes go within a couple days, right? Depending on the house. So there's still that demand there for it. And people are just going to need to start becoming familiar with the fact that pricing is what it is. And the interest rates are really here to stay, at least this year.
I love that. I love that. Well, sweet, man. Well, we always end on a quote, and as we were talking, I came up with one. I might have said it before, but I'll say it again. And it's back to the conversation we were talking about with, you know, being in a team, but also, promoting that abundance and always driving, creativity. And that's
Yeah,
easy, or ease is the breeding grounds for complacency. And I think it's just totally accurate. Like, the easier things are, the less you're willing to work and the more you're willing to just kind of let things go. Right. And so the constant, you know, there's always, crocodile right behind you. You got to keep running, right? You got to keep
right.
working towards it. That allows that consistent push for motivation and push for success. So
I love that,
love
bro.
that.
Say it one more time again.
Absolutely. Ease is the breeding grounds for complacency.
Ooh, yeah, that's really good. That's
I
really
love
good.
it.
That reminds me of the quote as well of, hard times make strong men make easy times make weak men create hard times. And it's just that vicious cycle of, just like you said, if it's easy, people are going to become complacent. So, dude, that's awesome. That's
I
awesome.
love
Thank
it.
you for sharing.
Absolutely. Absolutely. Well, we always got to end off on the NGRN meeting up on the 28th. Super excited about that. So if you're in town, Tucson local, love to see you. Also, I have a lunch and learn coming up this Thursday. So if
That's
you're in
right.
town and want to attend that, that would be awesome. It's at Pioneer Title on River. So
Cool. What time is that at?
it's from 10:30 to 11:30
This Thursday.
this Thursday. Yes, sir.
Awesome.
So
Yes, hope to see everyone there at NGRN. Drew and I have been pounding the invites, personal invites this month. So we're really expecting a good turnout. And I can honestly say I have some interesting, really cool people that you probably would never have the chance to meet who are coming to the meetup. And so just understand that Drew and I, we're not just putting this together to drink beer and have food at the Sands Club. We are super passionate about getting together, networking, and, giving people the opportunities to meet with other like-minded, investors, business people, entrepreneurs. So hope to see everyone there.
I love that. And one last thing too, actually, since you said that, I completely agree. I come around, I have a connector personality, right? So I want everyone to have the same access to my network as I do. And so I'm going to share anyone and everyone I can. You're the exact same way. I want if there's someone super successful that I know that can bring a lot of value and a lot of, professional development, I'm definitely want them there. So I completely agree with you.
Absolutely. Absolutely.
All right, man. Well, dude, thank you so much for this week. I will see you next week. And yeah, have a great one.
You too, brother. Talk soon.
Talk soon.